From the virtual newsroom of ImpactAlpha, this is your Impact Briefing for Friday, September 10th. I'm Monique Aiken. Today, I'm joined by ImpactAlpha editor David Bank to talk about universal ownership and active stewardship, and to preview next Tuesday's Agent of Impact call. Hi, David.
Hey, Monique. I also want to share a bit of my conversation with Hiro Mizuno, who until recently was the chief investment officer of the $1.7 trillion government pension investment fund of Japan, probably the quintessential universal owner. We'll hear more from him on next week's call.
Great. But first, here's what you need to know from the week in impact investing. Pension funds have been reporting spectacular returns, sometimes at the expense of their own beneficiaries. For example, investments in the single and multifamily housing markets. ImpactAlpha contributing editor Imogen Rose Smith writes that pension fund capital may be driving up valuations and pricing out teachers and other essential workers, including their own beneficiaries. Conservation finance is gaining steam. Investments from corporations like L'Oreal and Apple signal growing interest in sustainable forestry and ecosystem conservation. 7 in 10 conservation investors are planning to boost investments this year, according to the Coalition for Private Investment in Conservation. The parade of new climate funds continues to swell. The latest, Galvanized Climate Solutions, from hedge fund manager and one-time presidential candidate Tom Steyer and Katie Hall of Hall Capital Partners. Among the backers are billionaires Mark Benioff and Laureen Powell Jobs. Galvanize says it will commit a quarter of its profits to climate and climate justice organizations. Elemental Accelerator in Honolulu is spinning out Earthshot Ventures with $60 million for, quote, bold and diverse founders transforming markets with new climate solutions. The two funds share some of the same bold-faced investors, including Steyer and Laureen Powell Jobs. And the Employee Ownership Catalyst Fund raised nearly $5 million for worker ownership conversions. The fund is managed by mission-driven finance and project equity and has commitments from Living Cities and others. ImpactAlpha subscribers got all of these stories and more in their email each day this week. Welcome back, David.
Great to be with you again, Monique.
I saw the piece in ImpactAlpha this week about the new wave of shareholder resolutions that are coming up in the wake of last year's unexpected victories at Exxon and other companies.
Yeah, shareholders are emboldened, I should say. There are going to be resolutions, obviously, on climate, as you said, but also on income inequality, on what are called public benefit corporations, on all kinds of things that come under the guise of stewardship. Some people call it active stewardship, forceful stewardship, long-term stewardship. Stewardship is kind of hot, including, I think, at your shop tip, and we're looking forward to the work you guys are doing.
Yeah. I mean, we are focused on systemic risks and opportunities and sharing with investors how to understand all of this, and more importantly, figuring out what they can do about it. We've got an upcoming paper on stewardship in the next couple of weeks, and we're also fielding an industry-wide survey on the topic to help folks understand where we are and what do we need to go where we need to go.
Yes, we have a link in today's brief that people can use to find that survey, Monique. We're also going to take this up on next week's Agents of Impact call. It's one of our in our series on reimagining capitalism. And the kind of idea that underlies all of this is this concept that's gaining traction around universal ownership. And it's been around, it's been known for some time, of course, but it's kind of gaining salience in this context of stewardship, as you say, because what it means is that you can't, if you're both a big investor, but even small investor, if you got your 401k or you've got your 529 account for your child's college fund, that say you're invested broadly across the market, and most of the returns that you're going to see are a function of what the market does, not what stocks were picked. So therefore, you've got a stake in that market being a sustainable market. And if things like climate change and income inequality and other risks are taking down values, it's going to affect you as a universal owner. As I mentioned, one of the biggest universal owners is the government pension investment fund in Japan. I had the great pleasure of speaking with Hiro Mizuno, who has been until this year the chief investment officer of the GPIF. And he's one of the champions of this universal ownership concept. Let's hear him.
I think this is sort of like a kind of a step up for the institutional investors from paying attention to what's happening in the portfolio they own to the world surrounding the portfolio that we own. And one of the conclusion I reached in the end was, whatever we do within the portfolio we own, that cannot be totally segregated or insulated from what's happening in the world, right? So that's where the universal ownership and the philosophy kicks in. The investor should pay as much attention to what they don't own as to what they own. So that's the real philosophy of universal ownership.
Yeah, I mean, it's really about taking a wider view. This is not just about individual portfolios and competition. Stewardship is really thinking about externalities and where do we share collective responsibility and what can we do collectively to do something about it, because it matters to all of us.
Yeah, internalizing externalities, as you say, Monique, is one of the sort of key concepts that's coming up as well. And the negative externalities come from somewhere, and they come from, in many cases, companies that are also in your portfolio. So some companies in your portfolio are doing damage to other companies in your portfolio. So the notion is that if you're managing that, you need to be working very closely and aggressively, frankly, with the companies to mitigate their negative externalities, not just for the risks to that company that they might be caught on the wrong side of, say, climate regulation or something, but on the risks that they're posing to the rest of your portfolio.
And the rest of society.
Here's Hiro again.
I mean, if we are making the money by investing in a company who actually produce a lot of, the negative externalities, who have to pay for that cost? If not paid by other company in the portfolio, somebody else have to pay for it. And usually what happens is the government or like a community have to pay for it, right? So we have to be responsible for all the activity of the portfolio we own, impact on the rest of the portfolio or rest of the system.
One of the things that interested me in my conversation with Hiro was that the GPIF has taken an audit of its own portfolio and found that it's really on a track of 3 degrees or 4 degrees increase in climate, that's what their portfolio represents. And I asked him, how can you justify that if you're this kind of universal owner taking responsibility? And he said, that's exactly the point, that they own the universe, that the world market essentially is on a 4 or 4.5 degree increase in temperature, which, as is unsustainable. The point is not for their portfolio to try to dodge that. The point is for them to take some collective responsibility, as you said, and try to get the world economy, as in a sense, to decarbonize, not just their own portfolio.
Gives new meaning to know what you own.
And take responsibility for it.
Take responsibility for it. Well, that's going to do it for your Impact Briefing this week. More all day at ImpactAlpha.com. Thank you, David, and thanks to our producer, Isaac Silk. Subscribe to get full access to the site and the daily brief. Right now, we're offering podcast listeners $100 off their first subscription. Go to ImpactAlpha.com/subscribe and use the code Briefing100. Thank you for listening. I'm Monique Aiken, Managing Director for TIP, the Investment Integration Project. Be sure to check back for next week's briefing. Until then, take good care.